So I said in our first class, I'm neither a blockchain maximalist or a blockchain minimalist, and you all will have a chance through this course to form your own views. But one of the debates is, all right, Emily's debate, is this a good use of economic, good use of resources? But I would note that all strong currencies, strong monies, for centuries have had something to limit the supply. And so now we're doing it electronically and through this mining. It doesn't mean it's the best use. I'm just saying it's another way. So extracting gold out of the ground is very hard. And in the 19th century, to have big vault doors and security guards with rifles was a way to ensure it. And one could even say that having central banks takes costs. So I think of it as a trade-off of how you ensure a currency is a harder currency to create. But it doesn't mean that proof of work is the best way, which is, of course, then the setup to the question of, are there other ways to do consensus? So one other thing is, all of this hashing, how's it distributed? And this I pulled off the internet this morning. You can see these statistics every day. Proof of work and mining has formed mining pools. And these mining pools come together for simple economic reason that it's so unlikely to solve the riddle, solve the puzzle of mining, that if you can only solve it once a year, or maybe even once every 10 years, you weren't going to invest in mining. So mining pools started around 2010 to smooth out the revenue. So if Amanda doesn't want to get it once every 10 years, she might say, well, why doesn't all the 80 people in this room, you might, Amanda, I don't know, say, why don't we all form a pool and we're all going to use our laptops? And now this is still 2009 or 2010 when you could mine Bitcoin on your laptop. But we could say, why don't we all do that together? And then all of us could say, well, Amanda, that's a bright idea, but could you create the Merkle root for us? Could you do some other things so that our computer doesn't have to do all that other fancy stuff? So then Amanda might say, well, I want to charge all of you a little bit. How about if I charge you 1% of the take? And Amanda would call herself a mining pool operator. That's what's happened, is basically the economics of mining have clumped around mining pool operators. And the standard fees range from 1% to 3% that the mining pool operator provides a number of services to the miners themselves. And those services are compensated, as I say, somewhere between 1% and 3% of the returns. But mostly it smooths out the economics for all the miners. It does some other things as well, but that's the primary.
So I also had one question. Given you laid out the difficulty of mining has become increasingly difficult, and the cost of the electricity, the break-even point has actually becoming lower and lower in terms of the electricity cost. So with that in mind, over the next couple of years, if that's the case, people will start to lose incentive and keep doing the mining. And once that happens, what's going to happen to all the?
Well, it could go either way. As we said, just Bitcoin this is. Bitcoin adjusts the difficulty of mining every 2 weeks. So if there's fewer people mining, the difficulty will go down. And if you remember, I said you had to have 18 leading zeros. It might go back to 17 leading zeros or 16 leading zeros. And every 2 weeks, it adjusts based upon the prior 2016 blocks. Did it average 10 minutes? If it averaged, for instance, 14 minutes, then it will lower the difficulty. If it averages 6 minutes, it will increase the difficulty.